Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis.
Hey guys, it's James the Chart Guys. It's Wednesday, March 22nd. Going to do my nightly video on oil. So you can see that oil still has this weekly uptrend line intact here, longer term, where it is currently forming a bullish reversal weekly candle, depending on where the body forms at the close of the week on Friday. And on the daily chart, remove this. I said that on my recent video that the loss of this candle, the low of this candle at 48.46 was a red flag for continued bounce if you were in the bounce from this bullish reversal candle here. And the reason why is once we established this low, we needed this candle to be a higher low. And once this candle on this daily candle broke below this and created a lower low, that was a red flag. And you can see that we've pulled back further. Obviously, bulls bought the dip today after the inventory reports, even on a bear report. So what I'm looking for now is another back test of this 4 EMA, very similar to what we had here after this bullish reversal candle. And a green day confirms it, but we want to close above the 4 EMA on the daily here, because you can see we haven't had one close there yet. No close above, no close above, no close above, no close above, no close above. So the first step for oil turnaround now at this point, because we've set a lower low, is to now establish any pullbacks above this and set a higher low on any type of pullback of consolidation after this move up. So first step, you want to grab the 4 EMA, close above it on the daily. And really, I'm not going to go long oil until I see a daily close above this 8 EMA. And the reason why is because you can see the rejections there on these long upper wicks here and here. If we haven't rejected from the 8, we've rejected, if we haven't rejected from the 4, we've rejected from the 8 EMA here. So that's what I would wait for to go long in oil. At this point, everything is still an oversold bounce to me based on hourly oversold conditions. So obviously we got extremely oversold here, RSI, and we're bouncing. The next levels to look for on the hourly here are the 50 MA here, and rejection there. You're looking for further downside. You don't want to break below the low of this candle here. The low of this candle is 47.94. This is going to look very different when we wake up tomorrow. But those are the levels to look at. The 50 MA, see how it reacts there. And you don't want it to go, ideally you don't want it to go straight up and be overbought here on the hourly. You want it to consolidate sideways some and move up as it establishes support. So again, based on this daily chart, I am not going to go long oil. I think every bounce currently is just an oversold bounce until this clear resistance here of the 8 EMA is taken out on the daily chart. On the 4-hour chart, a little bit shorter time frame, you want at least a minimum of a TCG bull cross. Again, TCG bull cross is when the 4 EMA, my green line, crosses above the 8 EMA, and we get above this 20 EMA here on this very oversold bounce. So last few times that oil's bounced or consolidated at least from oversold has been when the 4-hour RSI has been really oversold. And again, just short-term oversold RSI bounces. We have a lot to prove for oil bulls here. And we've set this high lower high, another lower high. Had a higher high, but currently setting another lower high. So I'd like to ideally get above this high here of 49.48 on the 4-hour chart as well. So again, every bounce right now, just play it. You have to play it as a day trade, in my opinion, until the daily chart signal that it's time to go longer in oil for a mid to longer term. Have a good night, and I'll see you guys tomorrow.